All right, good morning, everybody. Hope you all are doing well. Whatever part of the world you're from, might be morning, might be afternoon, could even be evening. Got some really good templates setting up, a lot of volatility coming into the market this week. And the most important thing, some good template setups potentially taking place, building. We're going to talk about the templates, as always, do a little nice review. We're going to take a look at entries. You know, it's great to know what the template needs to look like for me to be watching that pair, but what the heck do I do for the entry? Shaky, good morning. Sheep, Polly, good morning. Joanne, Johan, probably Johan. Good morning to you as well. Day trading Doc. Morning. Oh, good morning. Greg, good morning. All right, ladies and gentlemen, good morning, good afternoon, good evening, wherever you are in the world. I hope you are fired up and ready to go, as I am. I'm caffeinated. I'm ready to get this thing going. All right, we're not listening to this entire song because it's like 4 minutes long and has bananas. Let's get going. All right. Holy cow. Just a reminder before we get started, I am not a financial advisor. This is not financial advice. The information on this channel is provided for informational and educational purposes only. And I'm reading this without the thing even up there. I've somehow memorized it. Information on this channel is provided for education and informational purposes only without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please feel free to read, pause, and go through this disclaimer. Good stuff. All right, I want to start out, as always, usually going to be with some type of review. I know, it's like, oh my gosh, she's drawn some lines on a screen. This looks like garbage. I understand. However, these are the templates that we're looking for. You could go and look at a chart without any candles up on the screen and find these templates, all right? If you have a previous day's high and low and the close up on the screen, you can go and you can find these templates in most cases. So what we're going to do is I'm going to go through these real quick. We're going to talk about the different types. Breakout and trend. So a day that's closed in breakout. These are referring to, in this case, since we're doing this on a Wednesday, I don't know if you've noticed, but I do these streams Wednesday and Friday for a particular reason. Today's the third day of the week. And then the week resets. And then Friday becomes the third day of the week again. So we have Monday, Tuesday, Wednesday. That's its own template. And then Wednesday, Thursday, and Friday, that's its own template. So that's what we're going to be describing here as one, Monday. Two would be like Tuesday. And then three is Wednesday. All right. Now looking over here, you got one Monday, two could be Tuesday spiking both sides, and then 3 and 4 maybe either Wednesday or even Thursday. And this would be Monday would have hit the high of Friday, Tuesday hits the low of Monday, and then Wednesday we have over here. So this is like that 3-day rectangle template. Sometimes it'll be 4 days. Same thing here. Sometimes it'll look like 4 days, but mainly looking for 3. Breakout days, looking for trend trades. Also, days that maybe, context is always so important. Maybe this has triggered previous day's low back over here in an up-moving market. And then you get a breakout day over here. And then over here on this day, you're looking for a trend continuation typically, but they start making lower lows and lower highs. Now you're aware of essentially a reversal trade coming off of the high of the week back down to where that pump. I'm going to skip these ads for you all. You don't need all that. All right, so on a breakout day, either looking for a trend trade or a reversal, either at the high or low of the current week. You could have a first red day or a first green day template. Where they've broken out or they've gone to the high of the week or low of the week. They've attempted to go higher and that fails. And then you have your reversal back down through the low of the week or back up to the high of the week, depending on, if this was first green day, we'd be going in the opposite direction. 3 days of breakouts, basically looking for overextended markets, and on that third or fourth day, maybe looking for the front side of a move to be broken, a lower low, or maybe if it was going down, a higher high, and then looking for that trade in our session. In my case, that's the New York session. For inside bars, there's a very certain or particular presentation that I like to see. For a reversal trade, I like to see the 3 stair steps to the high or the low, triggering that level at a certain time of day. That's my favorite. For a range expansion or a trend trade, which I think we've seen a few of those this week already, you get an inside bar, then you get a day that breaks out and pulls back, and then you get a trend trade on that third day. So maybe like inside bar, breakout, pullback, and then on the third day, so Wednesday, trend continuation towards the upside. It's going to look very similar to this. Okay, it's just in combination essentially with the inside bar. And we have some more advanced patterns. They're not really more advanced. It's just you have to pay a lot more attention to the context of the market. And it's not even really advanced in the sense that, you know, there's a lot to analyze. It's just, hey, we've been breaking out to the upside. We've been going higher. I just got a first red day, but we're still on the front side of a move. Maybe I should be very aware of the trap. All right, so, you know, if we're in breakout to the upside, it's a strong parabolic move. Maybe just watch closing price and see how volume is getting trapped or if it's getting trapped. And then at a certain time of day, looking for a trap opportunity. All right, this is my entry criteria over here on the right. I use the same one for every single trade that I take. I have certain variations of this pattern that I look for, that I enjoy seeing. Just like the trade that I took yesterday on US 30, going short, breakout, pullback, in a little inside bar continuation pattern. Love seeing that. You got the inside bar, and then you got an outside, basically a bar that spiked both sides, and then the trend continuation getting in at the low of that bar, which I'll talk about here in a second. But we made the lower low, we pulled back, and we were going lower. I'm finding one of these. I'm finding one of these templates here. I'm looking at structure on the day. I've got very objective rules. I'm about to pull this slideshow up right here, and we're going to talk about the objective structure rules that I use. Looking at the time of day, so in the session, are we going into a new 15-minute bar, a new hour? Because those things can lead to really large opportunities or really good entries as well with little to no heat, which is nice. After we get structural breaks, looking for those 3 pushes, looking for an ascending or descending triangle, double tops, double bottoms, triple tops, triple bottoms. And then the completion of the pattern is the engulfment, and that is what tells me to either get in or start thinking about getting in, depending on how big that engulfing bar is. Sometimes I'll opt to go down to a lower time frame and try to get in and, you know, really snipe a better entry, so that way I don't have to take as much heat. Let's see, stops above push 2. So I'm putting stops above push 2, or in some cases, or in a lot of cases, like for example, if we get an entry bar here and then we get a breakout fake out bar, something like this, and then I get in at the break of this bar, which is I do very frequently. If you've been following my entries for any amount of time, I like getting in at the break of these breakout fake out bars. You know, push 2 may have been all the way up here and the move going higher. So I'll just put my stop above that breakout fake out bar, because those are usually an indication that traders are trapped in that area and they should not go back above that. And it gives me a really good invalidation point for me to put a stop, especially once this bar closes lower. That's definitely going to be my invalidation. And then you can target however you'd like, but you can use a range expansion tool for the current consolidation. You could use a range expansion tool for the whole entire day's consolidation at some times. You could use the 100 pip box. You could use previous day's high and low. You could use the high and low of the current day as targets. Really, that's going to be at the discretion of the trader. A lot of times I find myself being more conservative, and probably sometimes a little too conservative. That is something that is on my list of let's get better at this thing, and that is letting trades go a little bit further, because I keep on just accepting 70 to 100 pips and being happy with that, when the trade is telling me that it's going to go, you know, 100, 200, 300, and I should be at least scaling out on the way up or down. All right, so let's go and talk about my objective rules for structure. I really enjoy seeing, you know, once we have structural breaks, when do I use this? Are you using this to find trade setups and things like that? No, absolutely not. Okay, the daily chart, the previous day's high and low, and the larger template is what is guiding my decisions on whether or not that pair is going to be decent. I use structure on the day to help me decide whether or not the setup is actually taking place, or if it is that 3-day template is actually playing out on the day. All right, it guides me into a decision-making process of, hey, it's the right time of day, and the market has gone through the process that you need it to in order for you to take your entry. Okay, so market making lower lows and lower highs. Whenever structure breaks, all right, whenever structure breaks, this is what I'm referring to. Whenever you get a structural break in a direction, you can expect a 3-push pullback. All right, 3 pushes is very subjective. It is a way of just seeing and gauging a pullback. All right, so you get 3 pushes back to the high, and then an engulfment, and now I can say, okay, I've got my engulfment. Where was my 3 pushes? And you can kind of see the way that the pattern has stair-stepped its way up, and now I can say, okay, there was push 2. We get our engulfment back down. I'm going to put my stop above P2, push 2, on the continuation pattern down. So I'm going to put my stop up here. And that will save me and allow me to get in a little bit bigger at times to allow the trade to continue to play out. That's just what I'm referring to. This is push 1. This is push 2. You go up into push 3, which is forcing traders to buy up high in a downtrend. It's forcing people to buy up high in a down moving market. And this is all hopefully, look, this is a daily chart. You know, this is over the period of a lot of time. But these exact same patterns, and I honestly didn't notice this was a daily chart. I thought this was a on the day chart at first glance. So you would never be able to tell, right? So the same exact patterns are going to show up on lower time frames as well. Lower lows and lower highs, you know, forcing people to buy up high. Look at the pattern. We got a big engulfment off the low, and you get this 1, 2, 3 to the high, forcing people to buy up high in a pullback, and then engulfing back down. All right, this little pin bar here is part of the M. Up, down, up, and then we have the engulfment continuation pattern to go down. Same exact patterns on a lower time frame. We're just looking at it on a daily chart. Let's come down. I want to talk about structural things. So, breaks in structure. These are changes of direction. You know, we've been going up, or in this case, we were going down, excuse me, and then we made a higher high, pulled back. So this is going to tell me, hey, the market could be entering into a period or an extended period of consolidation, or it could be indicating to me that the market is flipping around, okay? So I'm coming down here because I'm going to show on the day some examples on the day. So let's say, for example, that I had a trade set up on this day that I wanted to take part in. Market is making higher highs and higher lows. I like to see whenever this market makes a lower low, looking for that 3-push pullback and getting in. All right, I think this is a 15-minute chart. So looking at a 15-minute chart and trying to, in my session, time the entry on a lower time frame. Okay, same thing. I think this is the same chart. This is a 1-minute chart now, making higher highs and higher lows. You can use this on any time frame. Now, I would prefer to see a higher time frame make lower lows and lower highs first. The 1-minute chart doesn't necessarily have, you know, an insane amount of weight behind it. So whenever I see, like, let's say a 5-minute chart is my minimum. I see a 5-minute chart make a lower low. I like to see that chart start pulling back. But in that pullback, the 1-minute chart is typically going to start making higher highs and higher lows. So if you wait for that 1-minute chart to then flip around and start making lower lows and lower highs, it usually is a really good way of entering in. All right, we've got the lower lows, lower highs, and 3 peaks. Again, just the same exact pattern. So let's say that maybe yesterday was a breakout day to the downside, or maybe this triggered previous day's low, and now I'm looking for a pump up for a dump or a pullback, right? Maybe this is the lower low triggering previous day's low, or maybe yesterday was first red day, or yesterday was breakout day 1 to the downside. Any one of those situations where I'm looking for a sell high opportunity, and then the market has pumped back up in 3 legs or 3 pushes or whatever, 3 peaks. Very subjective. I understand that. It's all just a part of telling the story and trying to identify trap volume and what the market is doing at a certain time of day. So we've got the lower low, the 3 peaks. It starts breaking down and making lower lows again. So this was making higher highs and higher lows. We break down, make a lower low. And then you can kind of tell this is probably around 9:30 where they pumped it back up and made a lower high. and started to follow through. This is where I'm trying to get in. After it breaks down and pumps back up and starts to roll over, that's where I'm trying to enter in. All right, markets are fractal. So this, again, same rules. So let's talk about the rules for structure a little bit more. In a 2-bar pullback, in a down-moving market, okay, so whenever we have those structural breaks going down, so let's say we've broken down, solid candles closing below the previous low, and then we get the bars pulling back. I want to see 2 bars pulling back. I want to see 2 bars pulling back outside of the previous down closed bar, and that's going to give me a low. And then once they go up here and consolidate, this is essentially going to be my indication that we're just trading in between a high and a low. Once that 2-bar pullback occurs, I can draw this line down here. And then once it breaks, I now have a lower high in the market. All right, so just this can go either way. If we're making higher highs and higher lows, we break a high. They pull back in 2 bars outside of a 1-bar range. So 1-bar range I'm referring to. See how this bar is closed and there's a high and a low of that bar? I want to see movement outside of that bar's high and low. 2 bars. So now I can draw my high. The market will go into consolidation between a high and a low, and then once that high breaks with a solid candle close, I now know where my higher low is going to be. This entire slideshow and also the video is the most viewed video on my channel. You can go back and watch this if you want more information about structure. Yeah, good stuff. All right, so this is helping me get in. Entry criteria, I've shown you the larger templates. On the day, this is the behavior that I'm looking for at a certain time of day or at a certain level or anything like that. Certain levels being high and low of the day, high and low of the previous day, closing price, things like that. Good morning to you, Thomas. Kay, good morning. Lori, hello to you. All right. If you all have been here for any amount of time, we got about 55 in here. The stream is suffering. No likes, no comments, nothing. If you all could just do me a huge favor, say hello. Anything like that, hit that little button. It does help the stream more than you realize, and I do appreciate it. If you think this content is helping you or has helped you at all. Let's get out of this. So just a real quick recap. Look at this. All right. Think about Monday, Tuesday, Wednesday. This is the patterns that we want to see. Monday, Tuesday, Wednesday. This is the patterns that we're looking for. Now, these patterns can show up on Friday, Monday, Tuesday. It doesn't matter what 3 days, really, that the pattern shows up. But for the sake of us today is Wednesday, I am looking for Monday and Tuesday to line us up for today. And that is why we are talking about these patterns. So let's go and get out of this. All right, we're going to get rid of this. We're going to pull up this. All right. Okay, here we go. Nasdaq. All right, we're starting on the Nasdaq. Let me get a little sip here. I'm highly caffeinated, but I need a little bit more. Looking at what you all are saying. Appreciate y'all. Good stuff. Okay, so Friday. Peak formation low at the low of the week. Okay, day 1 of the cycle. They've gone up. I think some of you probably saw me posting this on Discord yesterday. Peak formation low, peak formation high. And then we had Tuesday yesterday. Okay, so maybe where the pump is began. Back over here. And then on Tuesday typically expanding the range of Monday. Monday is the opening range for the week. All right, so that was the type of trade setup that I was looking for yesterday. I did not take it here on the Nasdaq. I took it on the US 30. So we'll talk about that here in a second. However, whenever you go back and you think about those templates that we just looked at in the playbook drawings, okay, 3-day rectangles, peak formation high on Monday, peak formation low on Tuesday. We now have a peak formation high on Monday, and then we have a peak formation low on Tuesday. Heartbeat pattern, we've come in sideways. All right, think about a heartbeat monitor. We've spiked up, we've spiked down, we've pulled it back up on the inside. The market has a pulse, And now today we're going to decide what could we be looking for? What could we be looking at? So I'm going to draw my end of day consolidation right now because I'm noticing that at the end of yesterday we spiked up and we spiked down, and now we're just consolidating on the inside of that. So that could be an indication possibly of a ranging day today. Okay, we've got news today, 10:15. I'm sure we've got news on oil today at 10:30 for the oil inventories. 10:15. What a weird time. Oh, 10, sorry. 10 o'clock for that news. All right, so we've got our end of day consolidation. We've got peak high, peak low. So what do I need to look for? What do I need to see for this pattern? Number one, we're consolidating in the middle. That's step one. Step two would have been some kind of squeeze pattern. Usually I like to see these rectangles have been broken out of. That hasn't happened yet. So I'm going to try and find a pair that I like a bit more. I might come back to this. We'll talk about it a bit more. But as of right now, I'm not going to sit here and speculate about anything. There's nothing to speculate. We're sitting on the inside of a high and a low, inside of a range. I know that I need to look for either a short squeeze or a long squeeze pattern on this day, but usually and ideally, this rectangle would have already been broken out of coming into the session. And that gives me the idea of market only does three things, and I can look for something based off of that. Okay. Was yesterday a first green day? Let's see. Ooh. Okay, so at the very least, yesterday was a narrow range day. We had a peak formation put in at the low of the current day. We've been going down. Down, down, down. Does that mean that today has to go back up? No. Does that mean that today will go back up? No. Does that mean that we've been going down for an extended period of time and then yesterday tried to go lower at the low of the week and then closed above the open? Yes. So this is technically a first green day. Now, we did have a first green day back on Friday as well that did not do anything. We just kept going lower. Okay, so does that mean that we're going to keep going lower today? It could. Maybe. Trigger previous day's high. Large dumping day. This is where the dump began. Dump day, A. So thumbnail of this video was A plus B equals C setups. This is one of them. All of them are. Monday, Tuesday, Wednesday, A plus B equals C. Monday, large dumping day, A. First green day behavior on Tuesday, B. And then now we're looking for C, a buy low opportunity if it were to present in our session. So I would look for a squeeze pattern. Let's go to the US 30. I want to talk about my trade that I took yesterday. Obviously a fairly consolidated week last week. They triggered previous week's low, and all that was great, fine and dandy. Peak formation high, peak formation low on Monday. They spiked both sides of the range, pulled it back up on the inside. Started breaking down coming into the New York session, pulling back, and then going vertical, 9:15, 9:30. So let's take a look at 9:30 on a lower time frame. One of my really preferred methods that I enjoy using, and I've actually been trying to get much better at things like shallow pullbacks. For anybody that was in my webinar group or has ever been in my webinar group, you know that I've talked about some of my, we'll call them shortcomings, things that I'm trying to improve and get better. Everybody should always be trying to improve and get better. And if you tell yourself that you're perfect at all times, you're lying to yourself and everyone else around you. All right, so one of the things that I'm trying to get better with is shallow pullbacks. Strong momentum continuation patterns that are the setup is dictating that is what is happening, and being able and capable of entering in on a shallow pullback. So this is a very shallow pullback. All right, this is 9:30, explosive to the downside. You get an inside bar followed by a bar that spiked up and spiked down, and then the continuation pattern. I entered in at the break of this inside bar to the downside, and then I allowed this to continue to follow through as it should. This is one of the methods that I use. This is considered a breakout fakeout bar, and entering in at the trigger or at the low of that bar is one of the methods that I use for entry here on a 5-minute time frame. On a lower time frame, we can look and see what that kind of looks like. Help. There we go. All right, if I would have opted to use a 1 minute chart, I think the entry was probably even more obvious down here on a lower time frame. Push 1, pause, push 2 and a pause, push 3 and an engulfment. Yeah, that's pretty straightforward. Entering in on this bar's close, or maybe even the break of the little bar down here as it follows through. Okay, why was this trade taken? Tuesday typically expands the range of Monday, and we've been in a down-moving market that has failed to go higher, and a market that is breaking down, coming into the open, making lower lows and lower highs, and then completing the pattern by starting the expansion of Monday's range to the downside. So that is why I opted to take that trade. That's what I was looking for. That leads us into today, Wednesday. A plus B equals C. Monday plus Tuesday equals today. What is happening? Well, we had a peak formation high in a down moving market. So thesis-wise, like thesis building-wise, maybe this is where a dump has began. We've got 1 day of shorts triggered in, 2 days of shorts triggered in. So that is a possibility. However, the behavior that I have right down here is going to trump this to some extent. We have a breakout day. All right, we have a day that is closed in breakout. So this makes things a lot more simple for me, because a market in breakout only is going to do 3 things. We're either going to consolidate and turn into a narrow range day between a high and a low, the breakout level, previous day's low. Maybe we just sit inside of this. Or we're going to break out, pull back, and trend. We're in a down moving market. Maybe it's a trend trade on a Wednesday for a Wednesday. Instead of midweek reversal, we get a midweek continuation. Or it's going to midweek reversal, low of week, breakout, pull back, and reverse, which would be, hey, this is where the dump began. We break out, we reverse, we go back for the other side of the range, which would, the first target, of course, would be previous day's high. All right, that's what makes things simple about this. Market only does 3 things. We've closed on the outside of a previous day's low. We're in breakout. We can only do 3 things. So that tells me exactly what to look for over here. I'm not going to look for a ranging trade. I don't like trading ranges. That's not my thing. I would be looking for either the reversal or the trend coming into the New York Open, 9:30. All right. Okay, this is an opening range breakout. On the day, we're making lower lows and lower highs. This is that phrase, term, whatever you'd like me to say, where I say Asia makes a lower low, London pulls back, New York is the trade. Or maybe London makes the lower low, we pull back, New York is the trade. That's for the opening range breakout. All right, so right now we're making lower lows and lower highs. I need it to pull back. I needed some kind of pullback in order for me to take this as an opening range breakout to the downside. All right, we're also kind of on the inside of this high and low end of day sort of consolidation here. I'd really like to see this get to the outside some way, somehow. Okay. Nasdaq and US 30, although I had lots of words to say about them, they're not exactly my favorite template. Opening range breakout, yes, that is my favorite. I really like that. How it's presenting today, not my favorite. Okay, they kind of whipsawed it back and forth over here, and you can kind of see that the range that they've put us in, I'd like to get on the outside. Glitch, if you're not on the outside. Yeah, exactly. ... Exactly. I'd also put up ... because it's like, if I'm on the inside of this, it could come down here, it could consolidate, we could go back to the high of the day. It could do all kinds of stuff on the inside of here, which is why I prefer it to go in a more, we'll call it a more predictable area of the chart. Less possibilities. All right, S&P. Maybe this one has a better template. It's pretty much the exact same as the other two. I think that I'm going to opt to just keep moving. Let's go to the Russell. Does this look any different? Okay, it looks pretty much exactly like the S&P, except Monday was a breakout day. Tuesday attempted to go lower and failed. Was not a first green. I think the Nasdaq is really the only one that was, we'll put in, little air quotes, first green. All right, let's go to oil. Oil. Now, we got news today on oil. 10:30, we have the inventories, and I failed to check the news calendar again. So if it is tomorrow, feel free to yell at me, but usually it is on, Wednesday at 10:30. So Monday, okay, opening range for the week. Yesterday broke out, failed to go lower. We've gone back to the low of the week now. Pretty similar template to all of these other ones that we've looked at. Unfortunately, I don't have anything else special to say about oil because it looks pretty much exactly the same as everything else that we've looked at. As far as A plus B equals C, opening range breakout that has failed, pulled back up onto the inside of the range, and now we've come back down to the low of the week. So we're on the outside, which is good. In a market making lower lows and lower highs that only is going to do three things: trend, reverse, or stay in a trading range. At the very least, at least we're at the previous day's low on oil. At the very least, at least we're at the previous day's low on oil. We've triggered levels. We've triggered a level today. So oil automatically goes higher up on my list because we've touched the previous day's low. We're on the outside. All right, market is only going to do three things. We're broken down. We're broken out. This is the breakout level. Coming into the session. So I'm going to go down. Take a look at this pattern. All right. You have the lower low down here. They spiked up to a higher high, and we've been pulling back now. I don't know if this is a three push pattern. I have no idea. We could just continue to go vertical down. But I do like how we've came down. Yeah, dump and pump possibly. I agree, glitch. Spike to high in a market that has gone down. We triggered the previous day's high up here. We got 1 day down, 2 days down, 3 days of shorts triggered into the market, which I can't annotate. Okay, 3 days down. We triggered previous day's high up here, so maybe this is a dump for the pump. And we've gone into consolidation. So what would I be doing? I'm just going to watch at a certain time of day and see how this pattern continues to play out. Now, we could get off this live stream. They break down below previous day's low, and then we will go right back. I'll just assume, not assume, but the rules apply. We break out a previous day's low, for example. Let's say that we do that, and then it pumps back up to the previous day's low or around this area at a certain time of day, and then breaks down. What setup would I go with? Well, it's Wednesday, day 3 of the week. The market has been going down. We're in breakout to the downside. We've broken out. We've pulled back. The only 3 things markets do. And I would look for the low-hanging fruit or the trend trade, essentially, back down through the low of the day. All right. Keeps it all very simple. Now, if it starts making higher highs and higher lows and showing signs, for example, if you've watched these last 3 videos that I posted this over the course of February, which you should go vote and see which one is the best. Make sure you're commenting on all 3 of those videos so that way you can enter into the giveaway. But on those videos, what I was talking about is, because of these dumps and the way that the market is moving, for example, if we were to make a higher high today, not even that. Let's go and talk about this. Timing. If the market is dumping down like this, and then 9:30 opens up down here, go and study that pattern. I'll tell you, don't listen to me. Go and study that. The market has been going down for the first hour, into the second hour, and then into 9:30, we've gone flat. Go study that. Because that's usually going to indicate either one, they pump it back up and roll over for the afternoon, or they trap down low at 9:30 or going into 9:30, and then maybe there's a third hour reversal, something along those lines. But usually when the market has made a large, significant move prior to 9:30, I'm already thinking about, I don't want to get trapped in this. I don't want to chase this. I don't want to get stuck getting jammed into a low or a high or anything like that. Just go study that pattern, okay? Timing of moves is very important because if they move something prior to the market's open, that means something to me. And it means something to the market and things that could happen, all right? Where is the low-hanging fruit? What do you mean, Paulie? On this? I had drawn a little pattern down here. If we break out And if it were to pull back and then go into consolidation, 9:30 opens up and it gives signs of a continuation pattern. 9:30, maybe after the news, 10:30, whatever. We could be looking at that pattern. And that would be the trend continuation. Which I think was actually the thumbnail for this video. It would be that exact pattern. If you go look at the thumbnail for this video, I'm pretty sure it's that exact pattern that I just referenced. Because it's shown up quite a bit in the past few weeks. And it shows up every single week. Just about. All right. I've added up some extra pairs up here instead of asking you all every single week, 2 days a week, which pairs you want to see. I always get told the same ones. So instead of doing that, we'll just take a look. Natural gas. All right. Insane moves yesterday. We've got this huge breakout on a Tuesday. They just kept on running this thing all the way up into the end of the session. If you're somebody who is looking at this like I was, first time joining live stream, good to have you here. Good stuff. I was looking at this like some of you may have as breakout, push 1, push 2, push 3 outside of a previous day's high. And this is where structure is going to save me, and hopefully in the future will also save all of you. Just because a market comes out of something in 3 legs does not mean it's going to reverse enough to get a trade. That actually means pretty much nothing unless the market goes through the processes that I need to see in order for it to break down. And this is an up-moving market, okay? We've been going down, and then we get a breakout first green day. We go back up through previous week's high and go vertical. We're breaking out to the upside. So looking for a reversal over here is not necessarily bad, but I just need it to do certain things. So we would have needed to make a high, make a low, make a higher high, make a lower low, pull back in 3 pushes, and roll over. And all of those things need to happen at or around 9:30. This is 10 o'clock, so the timing isn't correct. It's very strange, right? It didn't do anything that I needed it to do or see. And therefore, this was a wash for me yesterday. However, A plus B equals C. Breakout day 1, breakout day 2, and that brings us into today. We've made a higher high. We've broken down. We've made a lower low. I'm not going to put a whole bunch into that, considering today's a new day and all of that stuff. We're kind of just sitting on the inside. What I am going to do is, just like in a market that's breaking down to the downside, okay, we could do this to make it, at least for me, like I can see these patterns a lot better like this. I don't know why. It's just how my brain is, I guess. Who knows? There's our breakout level. So we're breaking out. All right, we're broken out to the upside in an up-moving market. Today's the 3rd day of the week. These are my levels. So I would measure down. You can measure down for the trend trade 3 levels. You can watch price action on the day. You know, we've came down making lower lows and lower highs on the day. This was the high of the day. Is it the session beginning? Holy cow. This was the high of the day prior to the session beginning. We spiked that. We made a higher high. I would look for 3 pushes back down for a continuation pattern around 9:30 if it presents. Otherwise, if the timing doesn't work out, they go back here. They trigger the previous day's high at 9:30. And it starts to roll over on day 3. That would be my other side of the trade, my other variation or criteria that I would be looking for. Okay, either a high week reversal setup, and it has to set up a certain way, like higher highs, higher lows, 3 days of longs in the market, makes a lower low. Front side of the move could be broken, whatever it may be, at a certain time of day, looking for it to roll over. I like trading US 30, but it occurred to me that how big do I have my stop? Yeah, usually on US 30, it's got to be a little bit more wide, but also I think the contract value on US 30 is a little bit lower than some of the other indexes, so it's not so bad. if I'm not mistaken. Did gold low-hanging fruit at 7:30? Let's go to gold. Okay. Well, I don't know if I would call it that necessarily, Paulie. Yeah, I don't know if I would call that. That kind of just looks like maybe trading direction a little bit. Let's see, Monday. All right, so we're on gold. I'm going to stop reading the little thing over here because it's distracting me a little bit. But Monday, okay, opening range for the week. Tuesday, severe thunderstorm watch. I'm right in the middle of it. Yikes. Well, if the stream randomly ends, it's because I'm probably, blowing away. So we've got a Monday opening range, then we have Tuesday opening range breakout to the upside. And again, similar to some of these other pairs, okay? We've got, looks like a nice little higher high, lower low pattern, but I'm not even going to worry about that. What I am going to worry about is we're in breakout. Okay, we're in breakout to the upside. So that means I need to project my level across. And I need to think about the market is only ever going to do three things. We're in breakout to the upside. Currently on the day, are we making higher highs and higher lows, or lower lows and lower highs? Okay, we broke down. We attempted to go back to the high. The high seems to have failed, and now we're going back down to the low. So if we continue to make lower lows and lower highs on the day, this could turn into a day 3 reversal. If this breakout level were to fail, either targeting the breakout level, it's still very early in the morning, so it's kind of hard to say. But if this breakout level were to fail, maybe looking at previous day's low, and then ultimately it's day 3, so maybe the low of the week. US yen. EJ. All right, I'll go and take a look. This thing is skedaddling. I will say, Paulie, I think, is this what you were referencing? No, you said 7:30. So you see how the market broke down here? This is one of my entry methods that I like to use. So let's say that I've said, okay, this is my entry confirmation bar. Let's insert 9:30 here, and then we get this inside bar. What I like to do is I like to trade the trigger of the low of this bar to the downside in this case. Sometimes if I miss that entry, I'd even be willing to let this bar form and then trade below the next bar. But I would much rather prefer to get in as high as possible. I'm actually working on every entry method that I use as far as what to look for and what patterns I look for that entry. I'm doing a little slideshow on that, just focusing on those patterns. There's the lower low, higher high failure pattern, the lower low, lower high squeeze patterns, the lower low, kind of working the high patterns. All of that can be reversed. I'm doing a whole entire presentation on that, so that way I can iron that out with everybody and hopefully helps significantly. Seems like a lot of people are starting to understand the templates, but then when it comes to the entry, they completely butcher it because you don't know what you don't know. You don't know maybe what to look for, or you're getting impatient because you don't know what you're looking for, or whatever it may be. So we'll try and iron that out, hopefully. Okay, we've identified what to look for, what I'm going to be looking for on gold. Holy cow, look at this thing. Well, this looks a lot better than gold in my opinion. And I don't know that to be a fact, of course. It's still early in the morning. However, peak formation low on a Friday. Breakout day 1 on a Monday. Breakout day 2. Breakout day 3 on a Wednesday. 3 peaks at the high. We've broken down and made lower lows and lower highs. I think this might be one that I'm watching today. Okay, it's meeting my criteria. We've got 3 days of breakouts. Holy cow, what does that say? There we go. 3 days of breakouts. Market is only ever going to do 3 things. We're in breakout to the upside. So I need to be very cautious and aware that we could just pull back and consolidate and then rip back up and it would turn into a whatever. You know, it's still very early in the morning. However, I now have my levels. Okay, this is looking decent. I wouldn't mind watching this pair. Dixie's worth a look. All right, we'll take a look at that too. We got about 15 minutes and I'm on my last one. 3 days of breakouts. We've made the lower low. Have we broke the front side of the move? Or are we still on the front side? Okay, we're still on the front side of a move. I don't put a lot of weight behind this. I'd rather use structure and timing, but it is nice to see sometimes when all 3 of those things or all of those things kind of, you know, come together. It's nice to see. Yeah, this isn't looking bad. I think it's enough to at least make the list. Indexes wise so far up until this point. Oil is definitely on my list. Indexes wise, I'm not really entirely completely impressed because I don't have a solid template to trade. Maybe the first green day at the low of the current day. So we'll see. So maybe the Nasdaq needs to be on my list compared to the other indexes. Gold, you know, I think this has potential for sure. It's moving very rapidly and aggressively early in the session, which makes me feel like the template could evolve over the next, you know, hour or so. But we'll see. At least I know what to look for. Silver, also, you know, kind of up there with gold. Let's take a look at Bitcoin. I know some of you, let me know if you're here right now and if you trade Bitcoin, let me know. Is it even worth me going over this? Does anybody care about Bitcoin? Oh, man. Really scratching the bottom of the barrel with that drink. Not really. Okay. I think the spread on Bitcoin is a little big, but it has templates, just like everything else. So let's take a look real quick. I won't go crazy into it. I think this needs a zoom out. Okay, a market in breakout to the downside, excuse me. Continuing to break out, make lower lows and lower highs on a weekly scale. Last week broke down. We gapped up. Did not hit previous week's high. We've came down and triggered previous day's low and pumped it back up to the previous day's high. So a market closing, not necessarily in breakout, but we've come back up here and hit previous day's high. Are we at the high of the week? Not even close. Was yesterday a first green? Yeah. Okay, so we've had a large range dumping day coming off of Monday. And then we've came down, maybe trapped some volume down here on Tuesday. Breakout that failed, closed above the open for the day. All of you should be screaming in your head, hey, that sounds like first green day behavior. Hopefully. Is that an indicator or manual drawings? Which one came in? The previous day's high and low? Anyway, so we've got first green day. We've triggered the high. So now I have the high of the day and the breakout level as my reference. Maybe measure down 3 levels of drop. Okay. So either one, this is a pump for a dump. We've come off the low of the week. We pumped it back up once. twice, 3 times, making higher highs and higher lows. Maybe we're going to break down and make lower lows and lower highs, and then go back down towards, in a down moving market, the low of the week. However, yesterday was also first green day. We're making higher highs and higher lows. We're broken out. We've been pulling back. If we're pulling back into the previous day's low at a certain time of day, 9:30, and we start to go vertical, this poly would be a low-hanging fruit. Now I need to invert the scale for me to really see the pattern and feel better about it, honestly, because, like I said, I really struggle to see these longs at times. But we're broken out, and we're pulling back, and the market only does 3 things. That would be the thesis or the premise behind the trade, okay? Yes, previous day's high and low. Yes, it is an indicator. It's free. It's on my Discord. I've got it linked. It's not a public indicator. That's why I have to put it in my Discord. It is what it is. You know, if it was public, I would just post the link, but this is it, P2P. It does previous day's high and low, sessions, EMA, 100 pip bot. Like, it does all that stuff. You can even put, like, notes and stuff up on your screen, which is pretty cool. It's in the indicators section on Discord. All right, that was Bitcoin. Now I saw EJ, I saw the Dixie, and I saw dollar yen. Let's do dollar yen first. A plus B equals C. Peak formation high on Monday, peak formation low on Tuesday. They pulled back up. They've tried to go, and they've triggered the previous day's high. So number one, this is either a signal for a dump for a pump. So we've dumped it back down into the low of the day. Or they have broken out and failed to go higher. We've started making lower lows and lower highs on the day, and we're going back to the low of the week. That's the only 2 theses that I could come up with. This, I think, looks better, in my opinion, than some of the others because we've gone to the outside on the day, and the structure looks pretty good. The template is looking pretty good. If I still traded currencies, this would probably make my list. Okay, EJ. Okay, last week was a failed breakout week. They tried to go lower and failed. Did it close as a first? I think it was it was at least a narrow range week. It was very, very consolidated. We spiked through the high of the previous week here. Could be a signal for a dump for a pump. Tuesday goes vertical and breaks out. Breakout day 1 to the upside. Okay, so I project this level across. Now, they've triggered previous day's high in earlier sessions and continued to go higher, making higher highs and higher lows. So now at this point that we're up high like this, I would stop looking for a trend trade. Okay, this is no longer a setup to me because we're a little too high in the day's range. It's just not my preferred template. Okay, Euro USD. Someone said the Dixie as well. Let me do that before I forget. Breakout day 1, breakout day 2, breakout day 3, coming into a Wednesday, day 3 of the week. How long has it been doing that for? Okay. All right, so how many sessions of breakout do we have? All right, we're down low. We've broken out. Boy, I really don't have anything as far as levels here. Okay, we've got a lower low. Okay, good. So we at least have the lower low. So I have a lower high in place now. I don't know, Shaky, but Luckily, we can trade either direction, so it doesn't matter. Okay, lower low, lower high. 3 days of breakouts. So either I look for a higher high and a 3-push pullback, or I go with the trend trade and this continues to go lower. However, with this having gone as low as it has today, would I really be willing to keep trading the trend trade? Probably not. Pound Australian. Let's see if we can find a good template on there. Hopefully you all are giving me ones that you think have decent templates and not just because it's your favorite pair. Okay, yeah, this has been going up for a bit. Breakout day 1. This is an extended run. Breakout day 1, breakout day 2, 3, 4, 5. Attempted to go higher, 6. First red, just about. First red day. Okay, yeah, this is clean. I don't know who gave me this, but kudos to you. I don't know if you saw this and you thought this was a good template or why you thought it was a good template. First red day, we got 3 days of breakouts at least, and a failed breakout to go higher in a first red day. Project this level across. Peak, peak, peak. This triggering of the previous day's low is a signal for a dump or a pump for a dump. They pumped it back up. Lower low on the day, pumped it back up. Engulfment. Gone into a parabolic channel. This is perfect. Breaks down. There's my little bar. Enter at the bottom of that bar. Continuation back down through the low-hanging fruit, poly. Market only does 3 things. We're now in breakout to the downside. That was the trade. I don't know if you're in it. I don't know if anyone else took it or whatever. Please don't take that. Again, do I need to pull the picture back up? We'll just toss that up there for a second. But, don't take what I have to say as advice by any means. It's not trade advice. I'm just telling you that for the criteria-based entry and the perfect entry, that was it right there. And it's already going. All right, first red day triggers previous day's low, telling me to look for a pump for a dump. Lower lows on the day, pumps it back to the high, and fails to go higher again. Perfect. Let's see here. All right, ladies and gentlemen, we're at that hour mark. I like to keep these streams at about an hour so that way people can review them and they don't have to scroll through, 2 hours worth of content or an hour and 30 or whatever. I hope this has been beneficial to you. We've got 85 in the stream. If you have not clicked the little thumbs up button, I really greatly appreciate if you did. If you thought this was beneficial to you at all, I greatly appreciate all of you being here and keeping it fun, keeping it entertaining. For me, as the person sitting here screaming into a mic for an hour, your interactions keep it interesting and keep it fun. So I appreciate it. All right, ladies and gentlemen, I hope you have a great trading day. If I take any trades, of course, I will post my full analysis on Discord. Have a great rest of your week, and I'll see you on Friday, 8 a.m. Eastern Time, as always. See you in the next one. Bye-bye.